Hello, Market Insights watchers. In Market Roundup this week, we'll review a new Bloomberg Economics Fed cut forecast. In Megatrends, a tidal wave of certain cryptos ETFs may be coming in the new year, so get ready. And in Crypto Corner, Ian will actually answer a great mailbag question that's come in. So let's get started. Hello, Ian. Good morning. How are you?
I'm good, Amber. How's it going out there?
So far, so good. Doing well today. Glad to be here.
Yeah, my voice is a little hoarse. It sounds like I was, coming home from Vegas or something like that. That's not exactly what happened. I think I have a little common cold.
Okay. I'm so sorry to hear that, Ian. Well, we'll keep it short so you
Uh,
can rest because we don't want you ill.
well, we have a lot of stuff to talk about. We don't have to keep it short. I'm good. Let's go.
You're good? Okay.
All right.
So, everyone, in Market Roundup, Bloomberg Economics actually forecasts the Fed will hold rates steady until March 2024, when there will be, quote, enough data to convince officials to move a 25 basis point rate cut, end quote. So they anticipate the Fed will likely cut rates by 125 basis points in 2024 and another 125 basis points in 2025. This will bring the upper end of the Fed funds rate to 4.25 and 3% in those years, respectively. Now, helping support this thesis is the October Personal Income and Spending Report released on November 30th. It showed why Fed officials may be more confident that rates are sufficiently restrictive. Core personal consumption expenditures, or PCE price index, which strips out volatile food and volatile energy, decelerated 0.2% month over month and 3.5% year over year. Moreover, as noted by Bloomberg Economics, the quote PCE deflator, the Fed's preferred metric for assessing progress on inflation mandates, is on track to come in lower than median FOMC members' forecasts for the year end 2023. The momentum is for disinflation to continue through at least mid-2024, when core PCE inflation likely will fall below 3%. And by March 2024, year over year, core PCE inflation will likely fall 2 points to 2.7%. So in all, it shows that core PCE inflation is heading quickly toward the Fed's 2% target, dare we say. So Ian, what are your thoughts? I know we were discussing this before we hit record.
Yes, thank you for that. You know, inflation is slowing down, right? But it's not like the prices of things that we buy is necessarily coming down as quickly.
Right.
So I just people need to keep that in mind. It's a good sign in the sense that it gives the Fed more ability to cut if there is an economic slowdown. I just want to share my screen for a minute so we can better illustrate this for everyone. So what Amber was just talking about with the rate cuts, potential rate cuts next year and into 2025, I've been focusing on the March 2024 Fed FOMC contract. So this is a futures contract that trades, and it gives you what the market is thinking about where rates will be. Now, the current rate target is 525 to 550. That's where they're at right now. And if you look here in March of 2024, that futures contract is showing only a 42% chance that we'll be there. They're actually showing a 51% chance that we'll have at least a 25 basis point cut by March and a 5.4% chance that we'll have a 50 basis point cut by March. Now, the news here is that these odds have changed significantly in the last month. So if you look at where we are right now, right, versus where we were a month ago, there was a 21% chance that we'd have a rate hike, but the data has started to slow, which has given it now a 0.9% chance, basically no percent chance that the Fed's going to hike. And we're seeing a 51% chance that the Fed could cut by 25 basis points. A month ago, that was 13%. So those odds have gone about 50-50 from only a 13% chance that the Fed is going to cut by 25 basis points. And of course, this market can change, and when we get more economic data, the probabilities can change. But let me just stop sharing my screen.
Mhm.
The one thing I also want to illustrate is that the Fed normally, if we're going to have an economic slowdown, it's highly unlikely that they only cut by 25 basis points, right? Let's say we have a month where consumer spending slows down significantly, and you start to have this what's called a vicious economic cycle, right? Spending slows down, people get laid off,
Mm.
credit defaults start happening. This is what happens in economic slowdown. The Fed never just cuts by like, oh, we'll just cut by 25 basis points. It's like they go 50 or 100. And
Mhm.
in my mind, as long as the economy is not, in the type of crisis that we had during COVID or financial crisis, which I don't see as happening, I think that more Fed cuts is going to lead to higher prices of stocks, which is what we've seen started over the last month. Because a month ago, we were worried about Fed hikes. I remember the market was selling off. Then we got into November and we had one of the best Novembers in the last 40 years. I think the
Mhm.
S&P 500 was up something like 8% in November.
Mhm.
And that is really, telling you that the Fed is likely to cut and stocks want to go higher as a result.
Mm. Well, we'll see how this pans out. But Ian, I have to give you credit. You did mention a potential year-end rally, so I'm glad that November really blew it out of the water and followed what you were thinking as well. So good stuff there.
Yeah, I mean, it was setting up for it, right? We've been saying this
Mhm.
all year. We have the
Yeah.
rally to summer, then you have the
Mhm.
summer doldrums, peaked in
Right.
July, then we have a sell-off into the fall, and then usually the stock market finishes strong when
Mhm.
it starts out as strong as it did this year. It's a very typical seasonal pattern.
Okay.
And so, it looked like it was the probability for it to happen
Mhm.
was good, and that's what seemed to happen. And it's caught a lot of people off guard, right? Remember, we talked about how cash levels are very high,
Mhm.
allocation towards stocks are the lowest they've been since COVID. So a lot of people are underinvested here, Amber, and that's one of the reasons why we had this big snapback rally in November.
Okay. Very well.
Mhm.
Okay, everyone, let's move to megatrends. So, in megatrends, the first wave of Bitcoin ETFs is forthcoming. Bloomberg Intelligence reports a pair of standard SEC delay orders signal to them that the agency is getting ready to approve as many as a dozen spot Bitcoin ETFs, bolstering their 90% odds of a decision by January 10th, 2024. They note that early delay signals set up for approvals, and as BI notes, quote, the SEC issued delay orders on spot Bitcoin ETF applications for Franklin Templeton and Hashdex on November 28th. Now, this is an unusual move considering both applications were delayed less than 2 weeks earlier and weren't due for another order until January 1st. And this tells us the SEC is lining up almost every issuer for potential approval by January 10th, as we expected. These orders have mandatory 35-day comment periods that begin as soon as they're posted to the Federal Register, which typically happens 2 to 7 days after the SEC release.
Mm.
Now, this means two filings could get an official decision by the 10th of January at the latest, alongside 10 other filers, end quote. So here's a list of spot Bitcoin 19B-4 decision deadlines as of November 30th. You can check that out. And what's interesting, Ian, is that Coinbase is the custodian of 9 of the first 12 spot Bitcoin ETF filers in the US. And the outliers, there are VanEck and Fidelity. They chose Gemini and its own subsidiary, respectively. The key takeaway with this potential wave of Bitcoin ETF approvals in the new year is that crypto ETFs like these foster mainstream cryptocurrency adoption for investors like you and me, making it more accessible to everyday investors who really may not have formal ways of really just wanting to get into the crypto market, thereby bolstering the crypto market further. So how do you feel about this potential tidal wave of Bitcoin ETFs coming?
I mean, this is like the main event, Amber,
It
right? I
is.
mean,
We've been
we've been talking
anticipating.
about this for years.
Mm-hmm.
So first things first is like, why is the ETF important? Like, why are institutions and investors clamoring for this?
Right.
The most important thing is that the custody situation around holding a lot of Bitcoin is very difficult. Okay,
Mm.
so if you're an institution and let's say you wanted to allocate $100 million to Bitcoin out of your portfolio, you have to figure out a way to like safely custody it.
Mm-hmm.
With the ETF, you don't have to worry about that. And there's going to be more liquidity in that ETF because there'll be more institutions trading it as it's a public security, right? It's kind of an abstraction of the underlying. And I also think that there are a lot of portfolios and funds that are set up where they're not allowed to buy cryptocurrencies specifically because they're hard to custody. There's been tons of hacks and thefts throughout the history of crypto. But now, you have something that is equivalent to buying a SPY, an SPY or a QQQ ETF or a GLD ETF. And I think that it's just going to open up a lot more liquidity for institutions, and you're going to see a lot more demand come in. I think that we're going to rally. The price of Bitcoin will rally into the ETF approval. I would not be surprised if we see some profit taking on it, because I think a lot of the anticipation, the excitement is going to be priced in. But then over the longer term, it's going to keep a bid under prices, right? So in the very short term, I think there's a lot of traders right now that are gaming that the ETF is going to be approved. I think you're going to see a spike in prices when it gets approved. Then I wouldn't be surprised on that day if you see a sell-off from all the traders that have been buying Bitcoin ahead of it, looking to take profits. But I think in the evolution, in the longer term picture of where the crypto ecosystem is going, this can't be any better for crypto to have institutions able to buy it a lot easier than it was in the past.
Good point. Years in the making, Ian. Quite exciting.
Years in the making. I remember how sketchy it was back in 2013, like wiring money to some random exchange, and it was just a totally different ball game back then.
Completely different. So we're going to actually turn to Crypto Corner now and keep the crypto talk going, because we have a question in from Joe Z, and Joe wrote the following. Okay, I subscribed, but as a skeptic, we'll see. There are a number of critical things that need to occur and are currently unknown, like if and when an ETF approval might happen, among other major events. We'll see. I'm also anxious about general acceptance and ability to actually use cryptos in my everyday life. Best regards.
That's a great question, Amber. Thank you for writing in, Joe. And of course, thank you for subscribing to our crypto service. Now, I completely understand why people are skeptical about how we're actually going to use cryptos in everyday life, right? Because, we don't see people going to Starbucks and pay with Bitcoin and whatnot. And actually, Amber, I don't think that we're going to use Bitcoin and other cryptos as a form of exchange for goods in the real world just yet. I like to think of Bitcoin as some type of digital gold, right? Which is why the ETF approval is so important, because you can see where it would fit into a portfolio as some type of diversifier, or like a non-correlated asset that doesn't move with stocks and bonds, or is thought of like as gold. And I think that one of the most striking things that happened in the last few months, Amber, was an interview with BlackRock's Larry Fink. Now, Larry Fink is the CEO of BlackRock. He controls $12 trillion in assets, one of the largest money management companies in the world. And he said on CNBC that he has been hearing from his institutional customers that want to buy Bitcoin because they're worried about what's happening in the world, right? So there's this narrative, this idea that it is similar to gold in the sense that it's a flight to safety trade. When governments are running up deep fiscal deficits, spending, printing money, when there's chaos around the world, we know that there can only be 21 million Bitcoin no matter what happens, right? And that's why it has value. And of course, it costs money to mine Bitcoin. So there was some work and labor that was put into actually obtaining it. And I think that this is, whether you like it or not, whether you want to tell me what the intrinsic value, if it exists or it doesn't exist, maybe, there's some equation of exchange to value it. This is money times velocity equals price times quantity. There are ways to value it, but mostly you just go by what the narrative is. And the narrative has shifted towards institutions want to hold Bitcoin as a diversifier and as a hedge against what's happening in the world. Now, like, what is the adoption? Like, where is it going to happen? I think that there's a couple main avenues we're going to see in the next few years. Number one is going to be decentralized finance. And this is the idea that you can create the traditional financial system in a way that doesn't need gatekeepers. And why is this huge? Well, first and foremost, there are unbanked people all around the world, right? That don't have access to the traditional banking system like we have. And there are areas in the developing world that can't grow like the developed world because they don't have banks. Like they don't have mortgages on their properties, or on their house. They can't go borrow money from a bank. And crypto is a way to actually bank unbanked people. So for me, from a moral standpoint, I love it because it's going to allow people to get financial services in a way they never could before. All they need is an internet connection and a phone, or a mobile phone. Secondly, and also with decentralized finance, Amber, we're already seeing it. Remember, we reported about Apollo and JP Morgan using blockchain to tokenize real world assets. And this is a way that would create more liquidity for an asset, and easier to manage a portfolio and to transact when you have basically a token and not some type of, legal structure that's held in a bank. You have something that's fungible. You can just trade it on an exchange, a token that represents real assets. The second big thing I believe is in gaming. Now, it's not my generation. It's probably, not yours if you're watching this, but the younger generation spends a lot of time online. They spend a lot of time playing games, and their time is an investment, and what happens if they move to another game? They can't take that investment with them. It's a very closed system. And what blockchain allows them to do is to take some of these avatars and these assets they've developed and move them or migrate them to other games that will allow them to play. So imagine like a kid who plays Minecraft constantly, right? And has built up this Minecraft character. Well, maybe somebody wants to build a competitor Minecraft, but they can't encourage users to move from the actual original Minecraft to the new one. But they could if it was all blockchain based and their digital asset was tracked on the blockchain. And I think we're already seeing signs of Roblox, which is a huge game like this that has tens and hundreds of millions of users, starting to think about how they can implement blockchain technology to allow their users to hold those own digital assets that they create. So that is decentralized finance. Gaming is the second one. And the third, which I think is going to be a big part of this next wave, is what's called decentralized physical infrastructure. And it's basically a way for anyone who has a digital resource to offer it to the rest of the market, right? The big rave this year, Amber, has been AI. Now, AI requires lots of computing power, lots of GPUs. And there is a cryptocurrency protocol that we own in our Next Wave Fortunes that actually creates a marketplace where anyone that wants to sell or rent GPUs, computing power, can, and they do it basically on a smart contract. And there's a token that governs these transactions. And I'm not going to disclose which one it is, but you can see how these digital resources can create a new marketplace without some type of centralized gatekeeper, because of blockchain technology and cryptocurrency. So I think those are the three main pathways to adoption that are coming. It's not going to be, like I said, going to pay for a latte with Bitcoin, of course, unless you want to like get rid of some Bitcoin. I'm sure there are coffee shops that readily accept that, but I don't think that is going to be the main way that we use cryptocurrency. I think it's going to be more in the digital realm than actually in the physical realm.
Amazing, Ian. Amazing.
Thank you for the question, Joe.
Yes, thank you, Joe, very much. Well, Ian, that does it for this week. Great information from you as always. Great question. And everyone, thank you for watching. We appreciate you so much. And if you do have a question, just like Joe, if you like to have it answered, or a comment you'd like to share with us, please email us at marketinsights@bannonhill.com. So
awesome.
Ian, have a good week ahead. I look forward to seeing you on Slack as normal.
Happy December, everyone. We're in the last month of the year, the home stretch.
Time flies.
Thanks.
Have a great week, everyone. Bye-bye.